In this video, I want to go over the big picture of digital financial reporting. I want to point out that this information, you can go to the downloads and the links on my blog. It's in this section of the homepage, quick overview, digital financial reporting, the big picture. So I want to start by explaining what I'm seeing, which is a number of trends that relate to financial reporting that tend to exist in silos today, but all these things are ultimately going to be integrated and work together to impact financial reporting and accounting, auditing, and analysis. So the first is more automation and machine-based reports. Both general purpose and special purpose financial reports are going to exist in both machine readable form and the same historical paper or e-paper reports that are only readable by humans. Because these digital reports are machine readable, humans can be assisted by machines, and the humans and machines can collaborate to both create reports using expert systems or analyze the information from reports, or anywhere in between. And I'll show you how that is possible in the coming slides. So the notion of integrated reporting, sometimes this is called triple bottom line or sustainability reporting or ESG. Basically, all this is talking about is supplementing what has been reported before using additional generally non-financial information. So basically, the financial reports are going to get bigger. This notion of push-based reporting or pushed reporting is contrast to pull-based reporting. It's a trend. Again, you can go to the blog and go get more information, but it's basically using social media and other things to push information out to people that you want to have information about your company. And it involves more than just financial reporting, but it also involves financial reporting, corporate reports, etc. So the notion of continuous reporting, as contrast to the typical batch-oriented reporting of the past, I'm not sure. It's kind of like more on-demand type reporting when you're looking at, a comparison of creating a financial report to a manufacturing process. So basically, in just-in-time manufacturing, you talk about batches of one, and that's kind of what I'm looking at. What is probably going to happen in financial reporting, being able to get a report out quicker. And I'm not sure if it will be totally continuous, but perhaps, I don't know. Without continuous auditing, you can't have continuous reporting. So auditing, when most people think about auditing, they think about attestation of a third party. But there's a lot more to auditing information. You have internal auditors, you have the people on the reporting team that have to review their work to make sure that what they're doing is correct before they, press the button and make it available to people outside of a company for external type reporting. But it's basically, the continuous auditing is more about the quality control measures that are taken. Auditing is one of those. Independent auditing is a supplement to that. and people are already talking about AI-assisted audits. And the AICPA's created what they call a dynamic audit solution. And rather than auditing samples in the future, what's going to be audited is literally all the information, all the details of what might have gone into a report. The notion of triple entry accounting is really about, most people refer to it as blockchain. I think that's not correct because there are many types of distributed ledgers. The real focus should be on digital distributed ledgers that allows information to flow very easily between organizations rather than you just get information from within an organization. So basically, this is going to impact the reporting process because it's going to impact the accounting process, which is where the information comes from that goes into the report. And finally, algorithmic analysis or algorithmic regulation, or some people call it smart regulation. This is basically where you have automated processes and artificial intelligence and basically machines doing analysis. Not all analysis, but it'll do some. And so all these things are going to work together eventually and be integrated to one degree or another. And it's really depends on the imagination of software engineers and the imagination of accountants that ask software engineers to build software, how quickly this appears. But it just makes a whole lot of sense for these things to be together rather than in silos. So the first image, this is a really good image. It's the Data Coalition puts it out. There's a link. Again, you can get this from that blog post. If you look here, you see the notion of standard data models and, vocabularies or basically terms, business rules. The term that I use is assertions or rules. Interchange formats. This is just technical syntax. Identifiers is just basically standard IDs that work with the vocabulary. And so basically what this graphic shows is how all these pieces fit together, where you have the standard setters building these vocabularies, establishing the rules, using standard exchange formats, and doing it in machine readable form rather than taking their pronouncements and putting it in a book so only humans can read it. So, and then they have this notion of an engine of automation, and they have rule systems and software and artificial intelligence tools that use these standard formats to do all this stuff. And this is how compliance is going to be satisfied and how rules are going to be specified by regulators like the SEC, the FDIC, and other regulators in the federal government and globally. I'm from the U.S., but this is going to impact, it is already impacting everybody around the world, basically. This is a nice little graphic, very well done. The next graphic, this is this notion of continuous accounting. So this graphic was created by Blackline. It's a very good graphic, and it shows more details about the processes and tasks that are involved in creating a financial report. So I want to point out one thing here. You notice that Blackline references XBRL, but I talked to Blackline, and they do nothing with XBRL. A year ago when I talked to them, I speculate they're going to do something like that with XBRL. They're already doing some collaboration with Workiva for something. I don't really know what. But so this graphic, I basically took it and took the ideas from it and created my own graphic that provides this in a little bit more detail. And what I'm showing here is that, so on the left, you see the data of an organization. It comes from ERP databases, accounting system databases, spreadsheets, content management systems, and sometimes public data. They take all that data that's in all kinds of different formats. They do ELT, extract, transform, load, or they rekey information, or some other way, get it into a more organized manner where it's standardized. You have standardized metadata internally, and you have standardized rules. And if you do that, then it makes it a lot easier to automate the tasks and processes that are used to create a financial report. And these are those tasks and processes. So I'm not going to go over each one of these. You can read it and see, posting journal entries. Okay. And, then you have the notion of a soft close and a hard close and how that is done. So ultimately you have the XBRL report created. Anyway, so this is just breaking the tasks and processes down from that first diagram to a little bit more detail so you can kind of get your head around the kinds of things that will be impacted. How will that be impacted? So here, this graphic shows a comparison of the representation capability as contrast to the reasoning capabilities of software applications. So basically, what I want to point out here is that I'm focused here on logical theories, and most people's heads are here, comma separated value files or spreadsheets. Okay, this is the chasm that is going to be eventually crossed by people when they learn of the kind of things that our computers are actually capable of doing if they're set up correctly. So anyway, this graphic is important because it helps you understand that we're not doing anything unique here. There's a lot of people that are doing this, and there are lots of different ways to skin this cat. So that's why I wanted to show this graphic. So what does that mean? You take those tasks and processes, you use the machine readable capabilities of certain syntaxes and software, and you can literally make all these things work together better. So this is intended to be a conceptual overview. It's not, it's not a working set of gears. But basically, the point is that the XBRL, the global XBRL standard syntax, and maybe it doesn't even have to be XBRL. It could be any global standard syntax, preferably, or even a proprietary syntax, will glue all this stuff together and make financial reporting work far more smoothly than it does today. That's what this graphic shows. So why is that a useful thing? So this diagram from the Accountant's Handbook shows the connection between financial statements and society's well-being. Basically, financial reporting has an impact on the capital markets and the cost of capital, and this is why this will happen. It's more efficient, it's more effective. That's why it's going to happen. Here's another use case for it. It reaches the same conclusion. This is basically a model of the inputs to this system, the short-term outcomes, intermediate outcomes, long-term outcomes, and the impact, which is better functioning capital markets because they're more effective and more efficient. And that's the impact that digital financial reporting is going to have, not just in the US, but globally. It's already having that impact. And this graphic is intended to show the rich logical conceptualization of a financial report. So this is a simplistic, simplified version just to help people get their head around it. But this also exists in UML and in OWL and in other representations that software engineers use so that they can get their head around how accountants need all this stuff to work. So the point is, this is the level of detail. This is not some, thin leveraging of concepts of financial reporting. This is a very rich model, and the richer the model, the more you can do, the more software can be made to do. And most people are using about maybe 5% of this currently. A lot of upside potential. And so what is a financial report going to look like? Well, it's going to look like financial reports look like today. This one, it looks more like a spreadsheet because what's going on is the software that created this, they took the metadata and they rendered this to look exactly like a traditional financial report. And it's, you can take this and make it look however you want. It's a matter of preference. So it's not like this stuff is going to be more technical and, accountants are going to have to understand how to program to make it work. It's not going to be like that. This is all logic driven. Most people don't understand how to make this work yet, but they'll figure it out. And this is only one representation. This is a Microsoft report. But it can also look like this, which is basically, this is information that it was extracted from 33 Microsoft reports. How long does it take to do this? It takes maybe 30 seconds, maybe 45 seconds. You can go here and actually run this comparison and extract this information from the Microsoft report. And it's done in Excel. All the code is there. If you understand how to read Excel VBA code, you can see exactly how it's done. You can reverse engineer the process. I'm not a great programmer, but I wrote the code so that you can easily reverse engineer and see how it works. There's also issues with it. This is not the optimal way to do it, but it's not that hard, basically. And that's it. I will call that good, and you can look for me later on YouTube.